Good morning, traders, and welcome back to another episode of Market in the Morning. I'm your host, Kevin Dubrisky, and this week we're running the episodes 5 days in a row because we've got economic news every single day. And we're going to talk about today's economic news, which is ISM manufacturing. We have some headlines that we have to cover from over the weekend, as it doesn't seem the ceasefire, I don't want to say it's not holding, but we're definitely getting headlines that suggest things are still starting to pick up and things aren't slowing down anytime soon. So hit that like and subscribe button. We're also going to cover some key levels, some price levels for you guys, and we're going to run into the New York session open to give you guys some key trade setups, and we will be joined by Nilabh very shortly. So hit the like and subscribe because Market in the Morning starts right now. Hey, good morning, everybody. Good morning, Andrea. Good morning, welcome. Hello, Ozzy. Everybody, I hope you're all doing well. Welcome to our first Monday episode of Market in the Morning. Let's dive right into what's moving markets over the weekend. So we do have AI optimism and Fed easing lean higher, but Mid-East risk caps gain. So we know that the Mid-East has been really holding on the market to the downside when the whole Iran war started, but ever since the ceasefire, we completely skyrocketed and completely continued higher, putting all the bears to shame. Good morning, Capital R. What's going on, man? From UK, that is awesome. So if we want, as traders, and let's say we went over the weekend, we said, okay, what's going on ES over the weekend? We could check our breaking news tab, but I like to always start with the high impact tab. What's great with market, guys, is it has live news feed right from Reuters. So it immediately, something comes out, the second it comes out, market is covering it immediately. Nilabh, good morning, man. What are you doing on that side, bro? You got to get back over here. But what's great too about market is it separates all the news feed because not everyone is as important, and it puts it into popular. So us traders were able to vote, and the way we vote is by bookmarking those breaking news tabs, and high impact. So we have a filter onto all, which brings it to breaking news, then a filter on the breaking news, which gives us high impact, which again allows us as traders, any retail trader, any type of experience, say, okay, what happened over the weekend? What should I be aware of? Trump uranium will be unearthed by U.S. in coordination with Iran plus international atomic energy agencies and destroyed. Okay, so this is big. Is this part of the economic news that came out? Is this going to be part of the peace deal that we're still waiting to hear on? Let's see. Trump says other issues agreed. Final decision pending as meeting held in Situation Room. So this was 2 days ago. They were talking about the meeting being held in the Situation Room. And yet over the weekend, we heard nothing about it. So there really hasn't been much follow through on that part. Guys, let me know what you think. Is the Iran war going to drag out to midterms? Is it going to drag out till after midterms? Where do you think the Iran war is going to end in? Not so much where, but when. So let's check our breaking news tab now. Make sure we're not missing anything major here. And what's also great, guys, so many cool aspects to market's news feed. You could search in the high impact, and you could search headlines. You could search things like Trump to see the most recent market headlines that included Trump. Iran really wants to make a deal, and it will be a good one for USA and those that are with us. Israel requested Trump administration permission for major Oh man, are we attacking again? So again, sort of comes back to what we were talking about last week, that this isn't just the US-Iran war. Israel was really tied in with the US during this conflict. So we got to make sure Israel also agrees on the peace. Trump says Iran deal focuses on nuclear program with detailed commitments, and this is exactly what Trump wanted. Trump wanted the US to have full control over the Iran's uranium and really what's going on, period, right? They want to be able to take control of it so they could put money into it, right? And take money out of it, really. Trump says proposed Iran deal includes commitment to nuclear arms ban, which would be, again, ideal. This was sort of the main reason that we haven't found that peace deal yet, is because there was no talks and nothing to do with the nuclear weapons that they were trying to create. So let's get into some key levels. Let's break down what's really moving markets today, guys. If we're looking at the ES, we already know that overnight we were just at all-time highs yet again. The S&P, guys, is up 16% from last month. Now, something to note, the S&P has a very difficult historical time when it comes to June. So be very careful. We want to keep an eye, but looking at a weekly time frame, right? We always want to, when in doubt, zoom out. We are on a killer winning streak. This is how many green days? We're looking at 3, 6. We're looking at 8 weeks straight of the market moving higher on the S&P 500. This is a massive bull move. This is a bull market. There is no doubt about it. There's no argument about it. We are in a very bull market right now. A lot of AI optimism. We could even look at things like NVIDIA, AMD. Micron is another one that has really started to pop lately. Wow, crushing $1,000. Micron has now moved to a $1,600 price target. Most analysts are giving it. This, what we're seeing right here, guys, this is called momentum. When we see something strong like this with a catalyst, we do not want to short it. This, at what point does this say, oh yeah, we're going to go lower from here? No, the bars are moving higher, which is the candles and the price, and volume is also picking up. This is an extreme move on MU. It's probably going to continue higher here as well. What's going on, Sadhu? Good morning, good morning. Trump ain't signing anything until Yahoo does. Yeah, I know, seriously, man. It seems as though that is the case. Take a look at the daily time frame here on MU, still flying higher as well. Again, this is where that AI optimism comes in from. Let's check our ES. So let's go down to the hourly time frame, see if we could find some key levels and areas to possibly look for a long position as we want to be trading with the trend. Now, the first area that I notice is going to be this blue zone that we have right over here. Now, this area is around 75.67 to 75.73. And we see that this held as resistance twice over here, another time over here, tried one more time right here on this wick. And then what happened when we broke it? We held it as support. So this is going to be our key area on the S&P 500 today for some possible longs, 75.74. What would be great too here is if we came down, we swept a recent pre-market, previous day, Friday's low over here from 10 a.m., swept that and started to move back higher from there. So that would be trade setup number 1 that I'm looking for on the S&P 500. And that is the main key level we're going to be keeping an eye on, 75.70. Let's take a quick look at gold. I know a lot of gold traders in here, and let's not forget we do have the economic news as well. Let me just open up gold. Let's head back to our market terminal, and let's see what's going on in our economic calendar. We have it for high impact and medium impact. Countries, I have it set to US because we're trading the S&P 500, the NASDAQ, and gold mainly have a bigger pull on economic events that come from the US. Today is June 1st. Guys, it is the first of the month. Get that cow meme going. I don't know if you guys are on Instagram, but there's a first of the month meme that pops up every first of the month. Or if you're a Bone Thugs and Harmony fan, there's always that too. 10 a.m. Eastern, we're looking at ISM Manufacturing PMI. Our forecast is 53. Our bank forecast, which is where institutions are expecting, is also 53. Minimum is 52.7. Oh, I'm sorry. Prior was 52.7. Minimum is 51.8. And max is 54. So what's really important to us, guys, is where's that minimum and maximum? And then where does it actually come out? If we get an extreme move, which means it goes above the max or below the minimum, then we can expect an extreme reaction in markets. And what's great too is if you don't know what this data means, you could hit the brain icon, like I just did. And when you hit the brain icon, it pulls up the information about that economic data. ISM manufacturing, high impact. What is it about? It's key input for central banks' rate decision, signals overall economic strength and trends. High impact released often moves currencies on surprise, like we mentioned before. If we get an extreme, we get a surprise, we're going to see the market move. And prior month revisions can amplify the initial reaction. Now, we don't normally get revisions, but it's something to be aware of. Last year, I don't know if you guys remember, last year we got revisions left and right. It was quite scary, the economic data and the jobs reports they were changing midday. What's great too, guys, another fantastic feature that market has is it gives you the insight into the impact on whatever asset you're looking at. If we come in above expected, then we know this would have a more bearish reaction on the ES. If we come in below expected, we know it has a more bullish reaction. Now, this isn't the only part we need to be aware of. We also have to be aware of the overall context of the market. ISM manufacturing is not the strongest of economic events in that it isn't a CPI, it isn't a non-farm payroll or unemployment, but it is going to give us a little bit of a reaction. Now, that doesn't mean, oh, well, if we're above, we're definitely going to go very bearish, we're going to sell off today, because the overall context is still bullish. So we might get a short-term reaction, but that does not mean we want to be jumping the board onto short positions, especially while we're at all-time highs. So this is ISM manufacturing. This is at 10 a.m. today. We have our prediction markets as well priced in here too, showing a 23% chance that we are between that 52 to 52.9. In our historical data, what's great too with market is you could see what has the trend of this economic event been. So we see that, look at how high our PMI manufacturing has risen from January to February. It went from actual of 47.9 to actual 52.6, and then it sort of stayed stagnant. Right now, last month it was 52.7. So guys, let me know what you think in the comments. Where are we going to land on ISM manufacturing today? Are we going to come on forecast around 53, or are we going to be lower than expected and be a little closer to our prior, which is still very close to 52.7? We also have construction spending, which again, it's a medium impact. This is not something that's going to give us the biggest of moves. It does not have an impact on the Fed rate decision. It's not something that us as traders should really rely and weigh too much of the market on. So yeah, guys, let's check out gold. We got some XAU USD fans in here. We'll do some GC. We'll do some XAU USD for you guys. All right, let's take a look. What are we doing? What's going on? We see that we have had this pullback recently on gold. Ever since then, though, we have started to pull back to the downside. So are you still bearish on gold, or are you back bullish because of one little pullback? Yo, what's up, Seb? Good morning, guys. Good morning. What's great, too, with market is we could hit this candle here. I want to say, well, why did we rally here? Well, first, we see U.S.-Iran ceasefire report sparks gold rally. And that's great. We didn't even have to click anything. Market has them labeled for us. But let's say this one did not have the label. We could click the candle. Look how quick that pops up. Gold spikes as US PCE comes in cooler than expected, weakening the dollar. Look at that. That was not something on the label because we cannot put so much information there. Core PCE month over month was 0.2% versus 0.3% forecast. Eases near-term Fed hike decisions. Headline PCE and services ex housing also softened than prior, reducing inflation scare. It might be reducing inflation scare, but we really had strong CPI and extremely high PPI. Yeah, inflation is rising in the US, absolutely. Yo, Garrett, good morning, brother. How are you? Hope you're doing well, man. Hope you guys had a fantastic weekend. Don't forget to run that like button up. Extremely excited to be doing these streams with you guys this week, Monday through Friday. Yeah, guys, stop slacking, man. Run that like button up. Let's have some fun today, man. It's a good week to have a good week. Let's make some money in the markets, and let's be smart about it. Let's not just open some candles and expect that we know what's going on in the financial market if we're not using a tool like market that actually gives us that insight. At 8:30, softer than expected core PCE and weaker GDP lowered Fed tightening expectations, pressuring the dollar while boosting real rate sensitive gold. Concurrent Iran blockade escalation reinforced safe haven demand and driving a fast, high volume, very important, high volume 1 minute repricing higher. Any headlines that came out? Of course, we have a U.S. Navy blockade. We had the core PCE. So we had a lot running up in there. So we're going to exit out of this. We're going to come down to the day trading bias of gold is still slightly bullish. Middle East war escalation lifts safe haven gold demand. Hormuz and shipping risk support inflation hedge demand. Ongoing Iran ceasefire talks sustain de-escalation hopes. What could sort of run gold into the ground, though? Robust U.S. data could lift yields and pressure gold. Potentially hawkish interpretation of Powell's credibility warning. So Powell is no longer the Fed chairman. Now it is Kevin Warsh. So it's sort of more of how is Kevin Warsh going to be handling rate cuts going forward. We could check our general markets just to get an idea of where is there the most volume and volatility in these markets. We see equity leadership remains intact. Yeah, baby, it's Warsh season. You already know, man. Who are you guys more excited for? You guys excited for Warsh to step in, or do you wish Powell was still around? Risk on flows favor tech, financials, gold, and broader large caps, while small caps, energy, defensive, and real assets see outflows. Global liquidity is rotating towards growth and safety, with weakness in cyclicals and yen exposure. We could also hit our safe havens and see, look at how much gold is up compared to something like the yen. All right, guys, let's check out some gold price levels. We'll pull up XAU USD for you guys. Let's mark out some key levels, some actionable insights, and all that fun stuff. So let's start with our daily time frame. And the first thing that I note on gold, and we already have our trend lines in there, is we're in a range. Our highs around 54.50, our lows around 53.50. And then what happened, guys? We've been trading near the bottom of this range, but look at this old support back here. Old support. This was support. We were trying to move higher. We failed it. That support now becomes our resistance, now becomes our new high of the range. In my opinion, taking shorts on gold down here, you do not want to be a swing trader doing that. Absolutely not. You'd much rather wait for a stronger pullback, possibly sweep this lower high we had, trap some market participants, because we'll see, oh, we're moving higher, look at that, we're going to go long, just for them to be trapped at the top of the range and us to move lower again. Ideally, I am still a bit more bearish on gold myself. I do really want to see it come back towards that 4,300. And on XAU USD, it would be 4,100. On GC futures, it's 4,000. Key psychological point, 4,000. That is where I want to see gold push lower until I actually start to consider maybe getting some exposure, maybe taking a long-term trade on it. Because anywhere above this 4,000, 4,500, institutions are not that interested. If we could get back down to even 4,000 down over here on XAU USD, and price would just simply have to come back to its all-time highs. You're looking at a 40% return on investment, and that's if you're carrying the asset itself versus some type of options or stock play. Yes, sir, WStream indeed, guys. We absolutely appreciate you all. So gold, I would definitely look to see if we can try to hold this range and trade back lower. Remember, we're on the daily here. I'd want to see, look at this. Now we break it down to the hourly. We have an even more defined range. Guys, we have the one and only Nilabh joining us in just a moment. He was just here in the background. He peeked in and he peeked on back out. So once we break it down on a lower time frame, what do we see? We see 45, 60 as resistance. So if I am looking for a short-term trade on gold, the first thing I would do is I would look for shorts off of this resistance up here. Second thing I might want to look for is if we do break this, like our market bias says, do we have a slightly bullish bias, and can we break this resistance from the top of this range, come back and hold it as support, and just trade it to the next range we have, which is going to be right up here. So guys, round of applause, drum roll please. We have the one and only Nilabh joining us today. Good morning, Mr. Nil.
What's up, man? Good morning. Happy Monday.
Bro, happy Monday indeed.
Good start to the week, huh?
Yes, sir. Very exciting. Got some volatility overnight, some headlines. We have some economic news around 10. Super excited about that, man.
Very exciting. Yeah, we'll go over every single thing. Longer sessions in Market in the Morning. So thanks a lot, Kevin, for taking time out of your day to run these sessions. I truly appreciate it, man. Especially because now we're doing these longer sessions so the audience can get way more out of it. We'll be going deeper into New York session, going past NYSE Open. So we can call out some great trades on futures, call out some amazing plays overall. So before we dive into it, let's just go through everything again. I know Kevin I was watching, by the way. I don't know if you saw my comment. You called me out. I had to rush into here. So now that I'm here, I just want to go over, give my outlook. We heard yours. We're fully aligned on it. I agree with you too that we must be careful. We had some headlines coming over the weekend. There were some escalations there were some, and so it's been a back and forth, but we can clearly see what remains is that continuous fear that, hey, there can be upcoming escalations. The war is not done, and that's very evident when you look at the price of gold as well, and especially the price of crude oil, as that remains elevated. So you know that if crude oil continues to remain elevated, the markets are going to remain more on the fearful side and still pricing in the potential of continuous escalations to come. So what this means for us is that on the day trading bias, gold is still in a slightly bearish day trading time frame. Gold is still in a very slightly bearish bias. We can see that's very clear when you're looking at the intraday time frame. All the way since even end of April, gold has just been selling off. We've had intraday pullbacks that maybe are maximum of a few days, and then you see continuation down. And all these little purple dots are annotation on what actually happened over here. So you can see gold slides as Iran blocks Hormuz passage, energy shock fears grow. So that energy shock still remains heavily in focus, with the focus being on inflation and it coming down. Headline squeeze. Another thing I want to show you guys is I don't know if you see this. I don't know if Kevin has it right now on his screen, but we have a little icon over here directly on TradingView. It's not on any other chart or website, it's on TradingView. So if you click this, you'll see the market headlines feed pops up directly on TradingView right here. You can go to the calendar, and then you can also look at the bias for what you're trading. So in this case, I'll be on ES, so I'll go to ES here. You can see the ES, so that's oil. Sorry, I meant to go to ES, but you can click any of these, and you can see the headline comes in right here as well, directly on your TradingView chart. So you can even bookmark these. So if I want to click this, it adds to a bookmark, and you can access that in here on actual market. But this has just made it easier for you guys. Those who utilize TradingView, you can now access market. So this will be for all users. We'll be testing this out. You guys will get a test of it. You'll be able to feel it out, give us back feedback, what you think about it. And then we're going to publish a more polished version down the line. So this is just like the basic initial version. You have your calendar, which again, we have the prices paid. Remember, we're talking about prices paid, and that's what we have upcoming right now. So before we jump into the data, since that's at, I think, what is it, Kevin, 9:30 or 10? 10 a.m., right? That's at 10 a.m. Let's look at what some of the markets are doing. So I'm going to pull up ES over here on market. You can see AI optimism, Fed easing, leaner higher, but Middle East risk caps gains, right? We're still bullish. We talked about this target last week, market's target of 76.15, smashed it on Friday. We absolutely well, not on Friday, almost came closer on Friday, but we continued to push up. Seb said, quick tip, bookmark headlines into specific folders, geopolitical headlines, Fed headlines, economic data headlines. That's an amazing call out, Seb. That's fantastic. As well as down the line, we're going to be including an update to the bookmarks where you can follow lists that people have made to keep up to date of, hey, has there been headlines added to this narrative? Has there been headlines? Is this narrative not in focus anymore, right? So think about this. If there's ongoing Middle Eastern escalations and someone continuously bookmarks it, you know it's an increasing focus for the market. But now, there's no Fed rate headlines, Fed cut headlines anymore. You know it's priced out, right? This is a good way to keep track of it. So fantastic call out. So again, as we were talking, we saw just a complete amazing rally from our Thursday show, Kevin, where we called out a beautiful trade all the way from 75.25 over here. And we were calling that out the entire week. We caught it over here, we caught it here, and we caught this sick bounce all the way to new all-time highs. Right when we were doing market in the morning, we called out this buy. So now what this shows me is that we continuously have that momentum pressure to continue higher, and markets targets are deeper into the 7,600, 76.88, and we can take it level by level as we approach it. Currently, what I see happening is on the intraday time frame, we start off a bit higher. These are a bit of my more intraday areas of interest where I'm looking for a bit more of a pullback structure, buys, intraday retracement into these levels where buyers then jump in. What's up, Jermaine Andrew from Texas? How's it going, my friend? So we can pull back into any of these regions, and we'll be watching how NYSE Open happens in about 45 minutes. So if that's the case, if we're unable to continue past these highs right now, then we're likely to get a pullback into this area. If we do break above these highs, I would still be a bit wary, because what you don't want to be getting caught up in is buying right at the all-time highs. Because now what you're doing is you're literally buying at the highest the S&P 500 has been ever historically. You're in price discovery mode, and you're looking for breakout buys, which in my experience and understanding of the market, this is a big no-no. This is going back to the first principles of financial markets, is you buy low and sell high. So when you start buying here, as most retail traders do, they look for a breakout, a buy and retest. What ends up happening is the price may push 3 points above their entry, and then instantly dumps into the previous intraday liquidity buy area, where you'll see buyers jump back in, right? And that's the play you want to be in. You don't want to be caught up in a move and completely take the loss for a few points. You want to make it a high probability setup for you, so you can have the least amount of stress and the most amount of conviction and probabilities on your side. Now you can see how much of a better setup this is versus something like this. And you know that this has a way higher probability of playing out versus the market's just chugging away from all-time highs. Yes, that may happen. But all I'm saying is that type of pullback, the thing that we're waiting for here, is inevitable. There is no way the market just somehow decides that from 7,600 that it's going to continue to push up forever now. As you can see, every single week we get a pullback. We get several pullbacks continuing of the momentum. We get another pullback continuing of the momentum. We've been talking about this for a while, is that the markets are so delusionally optimistic, is that any sort of escalation in the market causes an outflow that is short-lived. So if we get some sort of escalating headlines over here come in, whether you see breaking news, so in this case, Iran says 3 minutes ago, Iran says ensure Japan ships passage via Hormuz with greater ease. Amazing. Iran is giving Japan some leeway over here. But you can see it's a balancing act game. Like, they're just playing both sides of it. They're trying to do damage control, bring the price of oil down. Oil comes down back to 90s, and then you see escalations, and then you see oil head back up into hundreds. That's what it is. It's just a game. They're just playing a game. The oil comes back up to 111s, 115s. Oh, de-escalation, and oil's back down to 90s, guys. Like this, we've gone through like 7 weeks of that continuously happening. So if we were to see continuing escalations, all that's going to cause in the global financial markets is you're going to get a pullback in equities, and that pullback is going to last as long as we get more buyers at a better buy price, whether that be 75.75, right? Or we get it at 75.25, this area, right? Close to a deal or close to an escalation, but we're close. Either way, we're getting close. Either way, we're getting closer to getting some nice plays.
Yeah,
that we're looking for in the market, right? So this is what I would be looking out for on ES with my intraday analysis, because I know that ES remains bullish, and it has remained bullish consistently since the end of March, days before Trump even came out, announced the ceasefire. All the way from over here, ES has been bullish since the 10% retracement that we went through earlier this year. So now you can see, am I looking to just buy at the all-time highs? Because things like this happen where you get this short-term play towards the upside. Yes, that's amazing. You can catch your points, and some people may take advantage of that. But then you also get minor escalations in the war front that cause outflows like this, that lead to outflows from May 14th to May 19th, 5 days worth of correction, and then buyers jump in. And once that happens, then every little slight retracement on the 15th minute on the intraday time frames get bought back up, and you create new all-time highs. Now we're at new all-time highs. What can we do? The logical thing for the market is to pull back to an area where we can then push back. So another headline: Israel military report sirens over north due to aircraft intrusion. So we'll keep an eye on this and see how this develops over here. But you see what I mean? that type of escalation or these new escalations will just bring short-term outflows, which then we will just buy back up. So moving on, gold on the other hand, gold, what we saw was gold come out of new lower lows. Remember we were talking about this area on how tapping into a level like this on the intraday time frame, and we talked about this on on Wednesday and Tuesday, is that we could easily get a push towards the upside, and it could be a deeper pullback, something like mimicking this, before we could see continuous downside plays. And you don't want to be getting caught shorting every little retracement over here, because you see what happened even over here. We get new all-time lows printed. Sorry, not all-time lows, new lower lows printed. Gold taps into this price sensitivity area to the left. What ends up happening next is we end up getting days worth of price action in the retracement phase. We push back, create a new lower high. We continue to consolidate within this area until we get new fresh escalations on the war front. And then you see a play towards the downside, which is like this, creates a new lower low. And that's similar to what we just had, is that we just had a new lower low printed. We tapped into this key price zone to the left. We pulled back, sellers exiting the short position, buyers jumping back in from this premium buy price. You see buyers come up, retested. This is our first sign of initial rejection on gold at this price point. Right at this price point is our first sign of initial rejection. Now, as my job as a day trader in the financial markets is to see what is gold's current bias. In this case, it's bearish on the day trading time frame because of the potential bias points that we have here. Escalating Iran, US, Israel clashes, and Kuwait attacks raise war risk. Strait of Hormuz security threats and naval warnings. Upcoming US ISM and PMI data may lift rate expectations based off of the prices paid. And it says right here, stronger manufacturing and prices paid readings would support higher real yields and weigh on gold via Fed repricing. So that's what we're going to get to. But that's my bias right now. And what I would look for is to see if price pushes into this zone again, is how does it react? If we start seeing reactions and rejections of this key resistance zone here, I'm going to look for shorts. That's what I'm going to look to price myself with. And that's pricing myself with the overall macro landscape that currently exists for this gold market. And when that happens, is that now it may be gold may push down, may retest over it over the next day or so. But as long as this level holds, the bias continues to remain bearish, I know I'm aligned correctly with what could potentially happen. And what could potentially happen is that we continue to get these breaking news, escalating headlines, and then you see gold continue to reach back down to these lows. But that could all take a few days. It could take a few hours. It could take a few sessions. All I'm saying is you need to be positioned and priced and entered in at the correct price. Don't be trying to rush sells at these lows just because you saw this rejection. Gold is known to do this. We see this actively. Well, gold will retest the same price point like 5-6 times before it's ready to move on an intraday and higher time frame bias and basis. So that's where I am at gold. On gold, I would be looking for more intraday sells. As we just marked out our analysis, we had a pullback here. This is the zone I'm interested in. I'm interested to see if gold during this session will push up into this area, and then I will look to examine to see if I can get some entries. Another thing I want to mention to you guys is just because we get massive plays, buy opportunities like this, doesn't mean that the overall macro bias change. In the short term, we may get quick change of bias and structure in order to take opportunities on the buy side. In this case, it was the data reports that came out on Sunday, give PCE and GDP, initial jobless claims that came out, and we got a push towards upside on gold, which we were able to call out and take advantage of in the market in the morning on Thursday. Since then, we've rejected the same price handle over here where sellers previously jumped in and drove gold to lows, and now we've just come back. So that's what I'm waiting for, is that this bias still remains intact. Short term last week, we took opportunity to exit our sell positions, get into buys after the data. Remember that, Kevin? It was after the data. Is we waited to see how data would come out. We saw the impact and we got into it. So now where does that leave us? Now, if we come back to ES, as we were talking about, this is what I'm waiting for. Is this price area over here, maybe even around here? I'm waiting to see how price pushes down into here. And then what I'm going to do is I'm going to jump into the lower time frames, specifically the 1 minute, the 5 minute, and we're going to observe and see how it reacts down here. Okay. Now here's the scenario. Kevin, if we just see price continuing to just 1 minute bearish candles continuing to drop into here, are we necessarily going to jump into a buy right away as soon as we tap?
No way.
No way, right? What I would love to see is as soon as we come into here, there's two things that can either happen. And let's write this out to make it as easy as possible, right? There's two things that can happen. Number one is price completely pushes through the zone, okay? Two, and let's make this a bit bigger. Two, oops, how do I get back into here? Price changes structure in LTF, lower time frame. Okay, and I'm going to illustrate what that could potentially look like. So let's say price continues down here, and in first case it breaks completely, and in that case we just continue to wait and we observe what happens next and at what price point it happens. The second hand is, let's say price comes here, we know it's a valid area where buyers drove price to higher highs, where we saw previous buying and price sensitivity going on here. If we come back into here and you see on the technical aspect, the market starts to change structure in the lower time frame, whether that looks like something like this, but you start to see a change in structure, right? A low, a higher low, you see a break of this consolidation, a retest, whatever that may be, that signifies a change in structure. And that usually you can objectively know when structure is changing, right? You know, it's not a subjective thing. Price is pretty apparent. Like in this case, we're creating a high. We tapped this high several times. Now we created some sort of lower high in the lower time frame. If we break past this area here, yeah, we can then continue down to this price point, right? It's very easy to read once you have a clear understanding. Or if we just reject this, maybe we just continue and push into this high again, right? That's very objective. So if we get something like this, this is where we start positioning ourselves for these buys. And that is much more safer and aligned with the higher time frame macro bias, with the intraday macro bias, and also with just understanding the positioning and the psychology behind positioning in the markets. Is that you're not going to get the best end buy entry buying at all-time highs. You're going to get it at a cheaper level.
Right. We're always buying the discount.
You're always buying the discount. Exactly. So gold as well here is that if gold breaks below this 44.90s minor intraday and lower time frame area right here, is that we could see push down to 44.50 right into this area. And that's something to watch out for, as gold is bearish. But again, as I mentioned, this would be that breakout type style entry. Personally, I thrive when I take trades that are more pullback based. And I think that's for every trader to understand, is in what type of setup and environment do they thrive the most. If you know you don't thrive when gold is in this sort of range over a course of a few days, consolidating or here, don't enter. Wait for the break of that consolidation, align yourself with the macro bias, and then take the sell. We got a few more headlines came in, nothing too important. And you can see like they didn't come up in the breaking news. So we'll continuously wait.
I'm glad you mentioned that about, knowing and understanding how markets are trading is one thing, right? Are we bullish? Are we bearish? Are we range bound? But really being able to pinpoint and understand when market conditions are in your favor, not because we're bullish or bearish, but because the reactions we're getting line up to your strategy, that's when you really say, okay, I'm going to start to increase my risk on these days, or I'm going to start to decrease my risk because I know we haven't been in my favor.
Yeah, and that's what it's about. It's like that's not something you realize over a course of a day or a few weeks. It takes time to understand your trading behaviors, what markets you thrive in. It takes time to piece all this together, but you don't need to make the same mistakes that everybody else has made, right? There's tools that exist. There's so many opportunities. There's so many learnings that exist now in educational materials that can help you avoid all those fundamental mistakes, all those technical mistakes. And that's what it's about. It's coming to the markets and knowing that, hey, I have an edge, and I have an edge not only today, but this edge exists at all times. And when I execute, I know that I have a high probability of exploiting that edge in the markets. Right. And a lot of times if you take a trade and you'll instantly get a feeling of whether you should be in it or not. And majority of the time that feeling should be, or all the time should be, yes, this is my setup. I'm confident. I've accepted the loss already and I'm in the trade. You should never get into a trade and then that feeling is, wait, why am I in this right now? And you get nervous and you freak out and you've already lost it at that point. So as we were patiently waiting, you can see what we were talking about. That is more likely that ES retraces from here, pushes into this price handle. This is going into NYSE open as well. We have about 30 minutes. We just had a new 4-hour candle open on gold as well. So either we get a break below into here and we get a push into 44.50s on gold, or I would personally love to see this level get retested over the course of the coming sessions, just like similar to how it happened over here, where you see market opened, we came back down here. Monday, we pushed up during New York session, tapped into the highs. Asian sessions, we created a new high, market sold off, and then again, later half in the week, we continued to sell off. But you can see the sellers got positioned in the first half of the week over here. They didn't start selling from the lows, right? From the intraday lows that were printed from the selling that took place on the Friday before end market open. They positioned themselves at the highs of that range. And in that case was that consolidative range that we were looking at. And in this case, it's this highs over here. So now, on the other hand, if you start looking at gold and it starts pushing into these highs over the coming sessions, I'm not saying that may happen today, it may happen tomorrow, but if it does, that's something to look for as an opportunity to align yourself with the higher time frame and intraday macro bias that keeps causing outflows from gold due to escalating headlines and escalating tensions on the war front.
Yeah, let's cover a little bit of oil. Oil with the pullback, we're getting some fundamentals sort of leaning it towards the downside too. Obviously, with the Strait of Hormuz letting a Japan ship run through, that would help increase oil supply. So if it's helping oil supply get higher, it's going to bring price back lower.
Yeah, for sure. So another thing is oil still remains largely above here. And this is important to keep in mind. Is if the markets were pricing in complete pricing out of escalations, oil wouldn't be here, right? You would see oil back at 60s, covering this entire impulsive move towards the upside. So now, why isn't oil here yet? Is it because the markets are still pricing in an upcoming risk or the potential of a risk? That's likely the scenario why oil continues to remain elevated, because even though it's lower than it was at 103, we're still at $90 a barrel.
Yeah,
you know what I mean? We're still very high compared to pre-war price point, which were 60s. We're at 60s all of last year, 67s all of last year. So and since like you're talking about since Ukraine Russia war got priced out, oil's been sitting and ranging between 60s, 70s, 80s. So the median being that higher 60s price point that we have over here being the median, right? Let's call this the pre-war median price point for crude oil sitting in this band over here. So if the markets were pricing out that there's no upcoming escalations or that the war is almost done, as Trump almost says they've achieved all their objectives, oil wouldn't be sitting up here. We know the markets love to front run something, and they love to front run it before it's even over. We see this constantly happen with the Russia-Ukraine, where the impact died down a few weeks after it actually started. And then you saw oil return back to its pre-war volume and pre-war price levels, despite the war actively going on. It's because the markets lost focus on it. But that all started a few months after war, even like this in June, 2022, we saw the outflow start on oil. So whether we're there or we're not there, as long as we're holding above this price handle, these 80s, this high 80s band, oil is still going to see more of a risk behavior where if any sort of escalations can cause oil to return back to its higher band, which is sitting up above 100. Now we know this is a definite area, right? We've known this before. This is exactly where oil was when we're just a bit higher when Russia Ukraine was ongoing over here. We're back to there, and we found our resistance here. So now you're playing this range, and now you play this range with looking at the sentiment and bias. If bias is leaning bearish, you're going to wait, and you're going to wait to see how structure actually changes on oil, whether anything develops in the tension. If things start escalating, you're going to start to see structure shift in a way on an intraday time frame where it becomes much more logical in order to take these buys, right? Right now, you don't want to be taking buys off of like areas like this, off these highs from this pullback, because we're still leaning a bit bearish on the technical. Once that structure changes, you see escalations, then you'll see continuations, more controlled and consistent continuations that are safer for you to ride, right? And then when you see de-escalations, the opposite happens. And again, then you can take those shorts towards the downside, but you have to be careful because any sort of escalation can quickly change that sentiment and then send oil shooting back towards 100. So right now, oil's in a phase of we're at these lows. Let's see if we continue to get escalations because oil being at lows at 80s is the perfect time for there to be escalations because there is less risk on a global economic front when oil is sitting at 80s and there being escalation versus doing escalations when the price of oil is at $110 a barrel. That doesn't make sense. You don't want to send it to 150s, right? It's much easier to send it to 110s and handle that sort of stress and pressure on the global economy versus trying to send it to 150s from 110. You get what I mean? So if there are escalations that are going to come, they're going to come when oil is at lower prices. They're not going to come when oil is sitting at 112s or 110s. That's when you see de-escalation happening. So back to ES. ES is still right now just pushing off of these lows. Nothing yet. If, again, as I was mentioning, if we start pushing on the lower time frame above this lower time frame area, as I was mentioning, this is what has to break in order to drive price down to 75.80 on the technical basis. If it doesn't, then we're just going to see continuation back to 76.20, which is 10 points away, and not really something that I want to be taking because this would be taking a buy at all-time highs. If that's the type of trader you are, you can take it because we could easily, with momentum, going into New York Stock Exchange Open, push above here. But again, then I would be mindful as that would be price discovery mode, and we can just as easily do aggressive pullback, something like this, aggressive pullback, come back into a price zone. Like you can see, we pushed into new all-time highs going into NYSE Open. And then we pulled back into the 10 a.m. candle and 11 a.m. Eastern. We continued buyer setup right over here. So something similar could happen where we push into these highs in going into New York Stock Exchange Open. We take out these highs over here, and then we dump going into the later half of the session and set up for buyers at a better intraday price point, being the areas we have mapped out here. I think that's as clear analysis, a beautiful analysis, very perfectly laid out in what we are expecting and watching out for, and how to really position yourself with the macro bias that exists right here, that exists on GC, on gold, on ES, so we can now confidently know how to attack the market for this coming session. And that's what it's about. It's about mapping out these pre-planned scenarios and knowing what the market bias is leaning towards, and then positioning yourselves accordingly at the best price point possible. Again, you don't want to be like, what looks like a better buy setup? Does this look like a better buy setup to you where your stop loss is going to have to be below these ranges? You're looking for break and retest, and then you're kind of left with guessing like, oh, what can I really go for here? Or something much more logical from an intraday price area where your risk reward is like 1 to 4, 1 to 3 versus a 1 to 1, even negative RR, right? Like it's a very clear answer that this is the more logical trade in this case, right? If you're a scalper, yeah, take this by all means. You can ride these highs up. You can ride it from here back to these highs, but it's about taking the highest probability setup. And is my experience, I much rather buy from a low than try to buy into these price discovery mode and into the highs.
Yep. Something I wanted to point out on the recent price action we've had on the intraday scale on the ES is we've been seeing a lot of pumps off the New York session. So here's 9:30, pump till about 10. Then we had a major pullback. The day prior,
and there's ES pulling back right now too.
Yeah, look at that right there.
So right, as we're talking about is that if that gets taken out, then you know that we're just going to push deeper into that liquidity area in that's sitting at like 75.80, 75.75.
Yep, exactly. But even though these intraday movements were pulling back, sure, so you're able to take some shorts. We just definitely be careful knowing that we're shorting off of all-time highs, knowing the trend is still bullish.
Yeah, and you're shorting into an active bullish bias on ES. Right. If you're looking for short, they must be quick points and you're out because you don't know where this is going to retrace from. And I'm telling you this, now is the perfect time to go into the lower time frames, into 1 minute, and start observing what markets are going to do as we approach these price points of 75.85, 75.80, 75.75. Like these key price points are very key. And they're going to give us information on how the markets position themselves as we go into New York Stock Exchange open.
Yep, look at this, man. We're getting quite the little dump here.
Beautiful analysis, guys. Smash the like button, throw some W's in the chat.
Yes, sir.
Give us a thumbs up. Share this with your friends, share this with your family. Like this is what it's about. It's about understanding the markets to a core. There's let's see what if there's any headlines that came in.
Not seeing anything crazy 11 minutes ago, but nothing really related to the move that's happening now. It's an intraday price movement. Price going back the way it should be going. Let's see. Yeah, look at that. Big drop on ES, big pop on oil. Be very careful in this intraday price movement. We know that we're at the bottom of the range on oil, so it gets very difficult for shorts. We know we're at all-time highs on ES and NQ, again, making it difficult for longs and shorts. Really looking for a more buy the dip opportunity than sell into momentum, right? Because we could sell off right here, guys, drop 23, 25 points on ES, and then make that wick, right? We swept that zone, come all the way back up, and then just start trading higher from there. We just heard that. Where was that? Iran holds communications with U.S. over Israeli action. Guys, this is what we were talking about in the beginning of our Market in the Morning episode. It's not just the U.S. and Iran war. It's U.S., Israel, Iran war. If Israel does not communicate, if Israel does not say that, yes, we will also go on some type of peace treaty, we will end the war, guess what? It's not ending. And what was Nilabh just saying before, guys? When we're at the bottom of a range, like we were looking at on oil, that's the best time for escalation to pick back up. It's almost like timing the market with the charts, lining it up with when the fundamentals come out.
Yeah.
Gold also trying to make its way back lower. Remember, guys, higher time frame wise, we are still looking for gold to make its way back down. It has been trying its best on GC futures to hold 4,500. That is, like you mentioned before, a key psychological point. And we see here on the daily time frame, look at all of the tests we had. 1, 2, 3, 4, 5, 6, 7, 8, 9. And then today is 10. 10 times did the market come back, not including this perfect one right here, 11 times did price try to hold. So this is sort of our line in the sand with gold to say, okay, a strong break below 4,500, a break below our recent low around 4,400, we're going to have momentum and make our way towards that 4,100. Got some more headlines coming in. Let's see. Iran-backed forces threaten to block Strait of Hormuz. Of course, we're threatening to block it again. Let's see how oil's responding to that. See you later, oil. Yeah, nice. Look at that. That is probably a 3%, 1% move on oil to the upside in a matter of 5 minutes in reaction to those headlines. Yup, escalations is not ending anytime soon. Guys, I want to know what your thoughts are on the whole war situation going on. Do you really think it's going to end anytime soon? Or do you think there's most likely a better chance that things remain a bit more escalated into midterms, right? A certain somebody, Mr. Trump, likes to hold things and keep things escalated, keep people distracted when things aren't really in his favor in other areas, right? Be it files, be it midterms, whatever it can be. Yeah, let's highlight some levels on NQ. Absolutely. I got
Yeah, I would also watch out for ES buys. Like ES is positioning itself quite nicely right now in the lower time frame. It's a good area to keep track of
yeah.
price action as it develops right now. We had initial, like, it's just a quick reminder to watch out as ES is tapped into that zone off that analysis we were talking about earlier, tapped into the exact price point we were mentioning. So we got to keep our eyes open for that, right?
Yep, looks good. I really liked ES wise. My key zone that I was looking for on the hourly time frame is much easier to see. 75.70. Check that out. Major resistance. It was resistance all week last week, Monday through Friday till we broke it. Thursday we broke it and we held it as support on Friday. Can we hold it as support again today on Monday? We have 15 minutes before the market opens, and that is of course when volume starts to pick up as well. If you're not in any trades on the ES or NASDAQ, usually recommend to stay out of it until that New York session kicks in. Volume could take us any direction. Let's see. Looks like NASDAQ also had a similar area where this was a resistance point for a little while. Take a look at the 30-minute time frame. Yep, resistance. We have a new support down here. 30,053. That's insane, guys. Drop a little money bag or a dollar sign in the comments. NASDAQ above 30,000. How sustainable is it? Do we head towards 31,000 next? We already hit highs of 30,600. Insanity, the moves we're seeing. All-time highs just ripping higher and higher. I'll tell you right now, and you heard it here first, second, and last, we're going to keep this bull trend going. We have very aggressive buying on the NASDAQ, and we'll pull up NQ here on market real quick. Eyes modest gains as AI optimism. There it is, guys. Listen, when everybody's saying one thing, markets love to do the opposite. And right now, people are still crying wolf about this AI bubble. We are not in an AI bubble like we were in the dot-com bubble. I made the comparison before, and people complained, oh, you're making a comparison of one company. No, NVIDIA is showing $80 billion in revenue quarterly, is insane amounts of capital. Big tech companies are also showing continuation and strong revenue gains. Yes, some of that is circular, but not all of it. Maybe 15 to 20%, max 20%. But a lot of it is strong and a lot of it is relevant, and it is here to stay. It is not going anywhere. We're most likely going to get that reversal, get that crash after the Knicks win the World Series, after the Knicks win the championship, which is going to be in a little bit. Guys, Knicks in 5. Let me know what you guys think, any basketball fans out here. But last time, it's funny, I saw a chart. I'll see if I could find it somewhere. But it showed that last time the stock market peaked in 99. We'll see if we can pull it up. Peaks and valleys. Knicks versus Spurs, 1999. NASDAQ peaked and then it sold off for the next 2 years. So maybe that's our unconventional market indicator that the Knicks win a series. Nope, Spurs, boo. Nah, Knicks win a series, markets sell off a celebration. But NASDAQ, let's run some NASDAQ levels real quick for the question in the comments. NAS, I do like this 30,300 area. This was support yesterday. Look at this on Friday, I should say. We had some support down here. So I'd look to see, can these higher lows start to hold, and can we make our way back towards those higher highs, right? Just trading the range that the market is providing. We just had another headline right there. Most Gulf markets slip after Iran and U.S. exchange strikes. Guys, things are picking up again. As much as we wanted things to settle down, we wanted to believe the headlines. There are only so many times we could hear, oh, it's a peace deal. We're in the final stages. And then we're not. How many final stages can we have until markets finally say, we're not listening to this anymore?
That's true.
Right? It's like, come on now. I bet if we look up final, it's going to come up like 50 different headlines.
Yeah, I think equities is going to fade this move eventually.
Yeah.
It's just a matter of when it does. But I'm optimistic this move gets faded, whether it's from here, whether it's from 75.50. We just got to wait it out and see where the market buyers position themselves and jump back into play, right? Right now, we were seeing this outflow with these escalations happen right after we were talking about, hey, we could reach this price point if we see escalations. Now we see Iran talking about blocking the strait for passage, right? So it shows you that this sort of, and now what you're going to see happen is buyers are going to start jumping back in once we reach a price point that where the market starts fading out this move, and then you'll see the move get faded out over the course of the next few coming sessions, whether that happens tomorrow, the Wednesday, or whatever.
Yep. I'd love to see a deeper pullback into the New York session. You got to remember too, from a retail standpoint, a lot of retail traders are stuck on the 5 minute, stuck on the 15 minute, the 1 minute, and they're looking at this going, oh my God, we're selling off. Today's the day that markets crash. Meanwhile, that hasn't happened, right? It's like it hasn't happened. Why would you think today's the day?
Yeah.
Today's the day. I know it because I'm looking at some candles on the chart here on the 5 minute. No, sir. We are looking at these candles and we are understanding when in doubt, zoom out, which is two things. Look at your higher time frame and understand the fundamentals actually moving markets.
Yeah.
Right now, if we could get a nice pullback towards 30,060, 30,050, that'd be the ideal optimal entry area, in my opinion, on the NASDAQ there. Wonder fib-wise. Fib tool, we do also have our 61 to 78% lining up in there too. So it is a pretty optimal trade entry area, if I do say so myself. I'd love to see a retest of 44.90 to 95 on gold within the New York session open. Are you looking at XAU USD or are you looking at GC? Probably XAU. Look at this. Yeah.
There we go. That gold analysis played out too, right? With the look, if you just share my screen for a second.
Yeah.
Like exactly how we were talking about. As soon as we break below this range in the lower time frame, we're going to push into 44.50s. And then all we had was an escalating headline that caused the break of it, and then you got the retest shortly after where you could have taken shorts if you're aligned. And that's what trading with fundamentals is all about. You got this headline coming in directly on your trading view, right? You can click the market icon here, it'll open up the trading view, and then at the same time you got these outflows on US equities that are going to eventually line up for the buys. You know what I mean? So when you start to enter these lower time frames, when you start to look for entries in the lower time frames, you have to go in and look at it. Okay, if these are fresh escalations, we may see a bit more outflows towards the downside before buyers jump in. You know, it may be more than just 10 minutes of market impact in order for sellers to completely exit. It may take a session, it may take two sessions, or it may take a few days, like it did in this case, off of these fresh all-time highs. We retraced and then we made new all-time highs. So all that tells us is that although we see these escalations right now, we're still macro bullish.
Yep, absolutely. Don't fall for every little pullback.
Exactly. So now if I'm looking over here and I see ES continuing to push below these lows, what I'm going to look for is where does it bottom out? What happens as we approach these lower this price ranges towards the downside? Do we instantly push back into this range and get our first signs of bullish price action printing?
We'll see. Wait for the reaction though. Don't force it.
Yeah, or does it play out in the second scenario where we smash through it? So now we're in that phase where if we're looking for something like this, we're looking for whether price pushes through the zone or changes structure in the lower time frame. And that's what I'm gonna move this towards here because we haven't taken anything, but that's what we're gonna wait for, is if in this case it doesn't change structure and it pushes below the zone, then we'll start to look for where can price go. Price can either go into this intraday pullback area here, or maybe slightly deeper into this wick area where we had some buyers jump in at 75, 55, and 50s. So that's what we're looking for right now, is how do we react as prices aligned over here. And you get these headlines: resistant front, Iran full Hormuz Strait blockade. Iran's IRGC said to have seized control of diplomatic channels. So you can see these escalations on the front. Most Gulf markets slip after Iran and US exchange strikes. The resistance front in Iran have set their agenda to completely shock the Strait of Hormuz and activate other fronts, including the Bab el-Mandeb Strait.
Yep.
So we'll continue to monitor this. These are big escalations happening, especially Iran's IRGC said to have seized control of diplomatic channels, straight blockade happening, and it's just the resistance front and Iran have set their agenda to completely block the Strait of Hormuz and activate their fronts. Guys, this happened as we were talking about that oil is at lows. There's likely to be escalations. And what do you end up getting? You end up getting these escalations. You end up seeing US stock market pull back from all-time highs. As we were talking about this, is that these are the levels where escalations happen, where you see inflows on oil, where you see outflows happen on gold in a very clean manner, based off of a few headlines that came in, all escalating while oil was at lows. And as I was saying, it's much easier and less risky on the global economic front to cause escalations on the war front at oil lows versus while oil is sitting at $100 a barrel. No one wants oil to be at 125 besides traders, besides people who are long in oil buys. No one else wants that.
No.
Right? No. So that's why you always see escalations take place. And now keep in mind, now that we're getting these escalations, if we start, look at this, traders price in June 2025, 25 basis points, ECB rate hike, first since May 4th. Okay, so if we start seeing a change in structure on the intraday time frame, similar to how we saw over here, then you know we're headed back to this area. We're headed back into these levels where we can start seeing buyers continuing to drive off of these escalating headlines. Over here on ES is still within our zone over here. So we'll be seeing how the stock exchange opens in about 3 minutes.
Yeah, we'll see, guys. Give it some time, let it open. We had some big headlines leading up right into that market open, and most of them are still holding that more bearish catalyst at the moment. Remember, it's all short term. These markets move off of headlines like that, especially if they're strong headlines going against what markets are currently pricing in.
Absolutely, man. Absolutely. This is what it's about. This is what's so fun about this, is that we get to come here, first of all, start talking about it, create some scenarios play out to a T. We talk about oil buys happening from these lows because of escalating headlines. We talk about ES pulling back because of escalations, gold pushing lower because of escalation. And guess what ends up happening? Gold ends up coming closer to that target, right? ES ends up pushing right to our intraday area where this is our first area where we're looking for buys, and then we have this zone and then this zone. So either way, we're still aligned with the macro bias on the higher time frame, because we know markets are greedy right now. They're delusionally optimistic. Amidst a war in the Middle East, we're still at all-time highs, and that momentum isn't going away. Yes, it may cause retracements that may lead to deeper price points, but what does that even do in terms of when you're looking at the higher time frame? Markets are largely bullish. It doesn't matter if we pull back to here, if we pull back to 7,300s, if we pull back to 7,200s, markets would still remain bullish. And that's something you guys need to get into your mind, is that these minor retracements doesn't shift market structure. So when you see something like this, it doesn't just mean that the markets are now bearish. It means that there's an escalation that took place, and guess what? Where we're at now, we're at an even better buy price than the buyers trying to buy up here. So if you're a greedy market participant, what are you likely to do? Are you likely to sell over here, or are you likely to look for buys? I know what I would do. I would look for buys here. I would look for the scenarios that we talked about, where now you start to observe and see whether price action starts shifting in this case or not.
Yep. And there's that 3% move I was looking for on oil, guys. We saw 1% on that first candle with from 89.50 to 91.17. Now we're back to 92.50. So pretty strong pump on oil. Yeah, nobody wants oil prices higher, but from a technical standpoint, from a fundamental standpoint, we know we're near the bottom of the range.
Yeah.
We're near the bottom of the range is when we're most likely going to get some type of headline. U.S. market, New York session did open.
Yep. New York session just opened. So as we were talking about, escalations came in, price pushed down here. We also have these lower zones to the downside where price, if it taps into, are fantastic opportunities to start watching for buys. Right now, we are in the observing mode of whether price completely pushes through the zone or whether price changes structure in the lower time frame. Now, if we go to the lower time frame, currently we're not seeing that change of structure. You see what I mean? We're not actively seeing markets switch into a bullish, creating double bottoms or double tops. But what we can do is we can observe this. And now if we start to see ES push up into here, and we start to see this sort of price action start to print, where it clearly shows you that there is a shift in lower time frame structure, then you know over the course of the next coming sessions, ES would make its way towards the upside like this. Whether that is if we get this sort of price action and then we make our way up to here, and then what you see end up happening sometimes is, let me just throw this headline away, and then you see you may push down into here and then back up, which is also fine. Either way, this sort of movement shouldn't shake out your positioning because that still respects the price zone that you had marked up. So what does this tell me right now is that we've tapped into here. We had some escalations happen that brought us down here. The overarching bias on the day trading and higher time frame bias is still bullish, and we continue to play off of that. And you can see in Flip Watch, you can see how it came up and that this could potentially push the markets lower. And it did. Is that this is what you watch out for, guys, is when you see this, what could flip it bearish? You see Flip Watch pops up with a headline and boom.
Yep.
That's something that could push it down. Strait of Hormuz tensions and blockade threaten energy supply and cost. Headline came in, headline came in, headline, boom, 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 boom. All these headlines that just caused this movement down here. So you can't tell me this is just technicals. It's not. This is purely fundamentals. The markets don't move off of magic or whatever you think they move off of. They move off of real events that are happening, and they happen right in front of your eyes. So for someone to come to the financial markets and completely ignore that side of it, you're delusional. You are just hoping that one day this will click and you'll make money without actually trying to understand everything that drives the global financial markets. And like we were saying, you get that first sign of buying take place. It doesn't look like we're pushing through the zone. It actually looks like we're respecting the zone exactly from where we had our buys. No. Guys, this is what I'm talking about, is when you have this level of understanding in the market, is you're able to forecast and see these things. And then when they play out, it's not hindsight. It's we predicted this. We analyzed it. This is market psychology. It's easier. It's better for the world to see. And as bad as this sounds, it's way better for the world to see war escalations when oil is at $87 a barrel versus when oil is at 115. If you see escalations when oil's at 115, guess where oil's going to be? 125. You don't want, no one wants that. So we knew that there was going to be likely escalations as oil sitting at these lows. We knew gold was going to push down lower as we push down. So why don't you have that Flip Watch feature? We are rolling it out little by little to a subset of users, as we do with most of our features. Some features go directly to everybody. Other ones go to sometimes we send it out to our top users. People are top like 15 users. We also have test groups. So that's why you probably don't see it on your side, because it hasn't been rolled out to you, but it will be over the course of the week or so.
Yes, sir. Yes, sir. That's a crazy reaction off that level that we had from our pre-market man on ES.
Yeah, right. Now it's our job to watch how ES, keep in mind, structure hasn't entirely shifted yet. Nope. We've just gone to rejection off this low. If we don't end up shifting structure in this way, then maybe we can push a bit lower. And where can we push? We can push right down to here, this key level, or our better buy areas. But if we hold this key level, even if we push below this low and we hold this key level right here, that's still an opportunity for buying, right? So that's something to watch out for, is that we are in an amazing position to look for intraday buys that can lead us back to this price.
Yep, looks good. Just always wait for the reaction. Just because price is testing your zone doesn't mean you jump in blindly.
Exactly. You don't jump in blindly. You wait for a reaction. Sometimes when you have very high conviction and you understand markets and what could potentially and you've accepted the risk, you can just enter. And I do that at times, right? But for most of you guys who don't have that level of conviction and you're just starting off, or whether you're 1 year into it, 2 years into it, it's always safer, regardless of who you are, to wait for confirmation. Like, look at this. Look how beautiful this played out and is currently playing out. So this is something that's beautiful. I actually entered buys over here at 75.82. And what I am now waiting for is my intraday stop loss is about down here, right where this is. And I'm looking to target into back to these highs where I'll close most of my position and hold some off in case we just rally into all-time highs. Usually that's not the case, is that we'll get some sort of play, we'll come back, retest the same price point, and then over the course of the next few days, jump back into buys and push into all-time highs. But we can see this is good signs that we had this initial bounce. Now, if we get a double bottom, or even if we push back into this key level over here, sorry, didn't mean to move that. If we push back into this key level over here, or even reject off of it, I'm still in these buys unless I get stopped out here, right? That's when I'll be a bit more wary. And as you know, like, everybody knows the risk that they're taking and what you're comfortable with. So you have to keep in mind that your risk over here, let's say you're risking 1% on a position over here, okay? Because you're aligned with the bias, you know this at your price point that you analyze in the markets beforehand. Let's say you get stopped out, okay? Or let's say this position actually ended up, we didn't even take anything and price completely pushed through here, and you were looking to risk 1%, but you didn't because it broke through it. Your next buy point is, let's say, down here and price reaches here. Here, I would actually risk higher. I would risk 1.5, maybe 2%, 2.5, whatever. I would risk higher, because what this price point differs in this case is that this is a way lower price point than where we currently are at. And this is a better opportunity, and it is a higher probability that it will push towards the upside from here. So I have more I can target from here. I can risk a bit higher. I didn't take the 1% here. This is a better probability setup, higher probability it plays out, much higher range towards the upside. You know the markets are going to be looking to get into buys, or likely to get it, position themselves to buys, to ride from 75.25 to 76.20. So 100 points, right? That's a lot. So either I would risk more in this case, right? Or I would risk a bit less over here. And all I'm saying here is that you have dynamic risking now, because it varies on different price levels. Now think about it. If you're looking for oil buys and you start buying over here, you're going to risk your moderate risk, versus if it's at a much lower price point, the lower band that we were talking about, you can do a higher risk because you know that the upside you have is way higher. So as we were talking about, I would like to take a moment to talk about my analysis and how well it's playing out. As we talked about, I said, guys, don't be buying into these highs. It's not a good thing. Buying into all-time highs, as there's a higher chance of escalations due to oil being at lows. We got those escalating headlines coming in. We took advantage of them, right? We were able to see all these headlines coming in where Iran is taking control of the Strait of Hormuz. We saw that outflow come in on US equities. We waited. We saw the initial reaction. We took the buys. We're waiting. We're still in the positions. We're looking to target these highs over here, back to all-time highs. We know that the US equity markets have been bullish despite being in the middle of a war. We know it's been bullish. And now what we can do is position ourselves with those buys, with those intraday buyers that we know always jump back into the markets because they're so greedy. And we're going to fade out this move. Gold, on the other hand, continues to push lower. Gold sellers can also jump in from here. Is that if we start seeing lower time frame push down, guess where it's going? It's going right down to our target here. This is exactly how we analyzed it in the pre-market, where gold was sitting up here. We said either we start to see sellers jump back in from this high, this range high, or a break below this lower time frame zone, which would lead gold lower, and it did. We got that escalating headline come in right over here. You got that retest, pushed down to lows. Now you're seeing further selling. That's going to drive gold deeper into 45.50s. This is the global financial markets, my friend. This is the beauty behind it, is when you start to understand it, you start to pursue. You don't get scared when you see candles like this. Think about the amount of people that were buying right here. And I mentioned, I'm like, guys, you want to be careful, is that buying into these highs is risky versus trying to buy from an intraday pullback. And I mentioned this, my bread and butter are these pullback buy setup. Is, hey, now I've risked this. If I get stopped out here, guess what? Guess what I'm going to do? Is I'm going to wait and see where price pulls into and whether it starts rejecting, whether that's here, down here, or whether that's here. And guess what I'll do again? I'll risk another buy, because sometimes it takes more than one time to get your positioning right in the market. Like in this case, I took these buys last week, profited, exited at the highs over here, took these ones that following day, was floating profit, got stopped out overnight, and then took advantage of it again the next day, rode it into all-time highs. So that's what it's about. Look at that. You get stopped out, market still respects your price point. Guess what you do? You jump back in. Sometimes it takes more than once or twice to get your positioning right. But when you get it right, you catch the entirety of this move towards the upside. And that's what being aligned with the fundamental bias it's all about. It's about being able to look at the markets from a holistic point of view and look at the actual mechanism that runs it, the liquidity, where it lies, what's going to cause the liquidity to flow in or flow out of the market you're trading. And if you don't have understanding of that, man, it's going to be harder for you to take advantage of it, because you'll just be like, oh, escalation, let me start selling. And then EOS jumps off, and then we're back at all-time highs. And now you just look like a fool who just acts impulsively like a monkey, starts making monkey sounds when he sees big bullish, big green, or big red candles. You don't want to be a monkey. We're past that stage of humanity. We've evolved for hundreds of thousands of millions of years. We've evolved past that stage. We use computers now. We're not making fire to cook our food. Some of us are, but we're not doing that anymore. We live on beds, we sleep on pillows. So use tools. You don't have to ignore everything that goes on in the markets and then just catch your 5 points and move on with your life. Actually put yourself in the shoes of what a $1 million, a $10 million trader actually does. A $10 million trader doesn't ignore market fundamentals. You have to act like the person you want to be. And that's regardless of who you want to be. If you want to be the best in anything, you got to act like the best. You got to perform like the best. You got to do everything that the best would already do. The version of me that has $100 million, I have to act like that person before I even come close to $100 million. You get what I'm trying to say?
That was just like the saying, surround yourself with those of what is it? Surround yourself with those who are in a position that you want to be at.
Exactly.
Right? Don't surround yourself with people, not to say like losers, but that aren't living up to expectations, that aren't making that extra step, aren't taking that extra step in the right direction, right?
100%, man. And you also want to be leading that sort of thing in your friend group. Is you want to be that person who's leading your friends, helping them improve. And Kevin's 100% right. Is you got to act like it. You got to move like that person. You got to really put yourself in the shoes that they and walk in the path that they've paved, right? Yep. So when you have all this stuff going on in the financial markets, do you think a $10 million, $100 million day trader or hedge fund manager or any trader at an institution would be ignoring this? They wouldn't, because there's so much on the line, because they understand markets are not as one-to-one as you think they are. They're not one-dimensional. This is a multi-dimensional environment. And it takes more than just charts for you to have a deeper understanding of it, or more than just looking at candles. And if that's where you just draw the line and you think that's okay, that's cool too. But keep in mind, it's if you're not evolving, if you're not growing, you're dying. That's as simple as that. You're decaying. And if you're in a skill set, the markets don't remain the same always. They change. There's a reason that gold is going down right now during this war front versus Russia, Ukraine, when gold was going up. You know,
Yeah.
majority of the people who trade ICT, they will have no idea why that's happening. But to us, it's very apparent. And I can spit about it. I can rap about it probably in 30 seconds, spit a bar about it because it's easy to understand to us because we pay attention to what goes on.
Bro, you're gonna have to spit a bar now.
Nah.
Now, come on, you can't tease us like that. Everybody wants to know why.
I shouldn't have. So PMI just came out
Did it
for S&P Global, not for the.
Okay.
Yeah, so we'll keep a lookout on the calendar as well over here.
Absolutely.
We'll just open that up. But you can see ES, man, I'm liking this push. What I would love to see is how the candle continues to, how price action continues to develop.
Yeah. Let's see.
Yeah, so ISM at PMI at 10 a.m. 10 a.m. And then you can see that we're going to be focusing more on prices paid. And we're focusing on prices paid in case because of the inflationary risk that we were talking about, right?
Yep. Something, guys, just keep a close eye if you are trying to try any ES longs at this point, right? Like Nilabh mentioned, we'd want to buy the lows. At this point, we've already had a bit of a move from those lows because we have news in about 13 minutes. Wait for that news to come out and settle, right? Maybe that news gives us a jolt back towards an entry point, but don't go chasing the move now.
Yeah, exactly. Don't go chasing the move now. See if we push back into this area, as you're mentioning, like this has played out beautifully.
Yeah, nice reaction.
But we could always push back into here and then pull towards the higher side and then continue up, right?
Yep. I'd like to see NASDAQ. If we're looking on the 15 on NQ now, a new support zone is sort of formed near 30,347. So that would be the area I would want to keep a close eye on. Real quick, I'll just share my screen. Same point from yesterday, right? Where price sort of double bottomed and continued to all-time highs is now where price decided today we're going to get a reaction and start to hold as well. I'm a big fan, guys, when you're trading the NASDAQ to be aware of where our common equities are. And our common equities for NASDAQ would be the big tech equities, Meta, Microsoft, Apple, Google, Nvidia, and Amazon, right? So if we see there's strong strength in Nvidia, Google's rallying too, Apple's also holding up, then great. That gives us a lot of confidence and direction on the NASDAQ. But if we have some type of issue where it's like, okay, well, Nvidia's below its previous day low, Amazon's selling off, and Microsoft is weak, well, then we know we should probably be a bit more hesitant on jumping in a directional trade if all of our equities are also struggling. But amazing reaction off of this broken supply. Look at this. This is from our pre-market too, guys, on NASDAQ. We had two main zones, 30,050, and we had this area around 30,350. That was right in that area. We could take a look at our market terminal too.
Yeah, look at yes. So on you can also see NASDAQ is going to push towards that highs as well.
Yeah,
it's perfect rejection off the same lows as ES. And on just a quick reminder, on currently on market, we have delayed futures data. We are working on getting real-time data for futures. So that's coming this summer. So stay tuned. But to jump back to oil is at 93.18. Oil is pushed. So if you pull up oil, yeah, you'll see that oil is pushing nicely too.
Wow.
We got those escalations that we're looking for.
Beautiful. Look at that, man. 4% move on oil in a day. Now, something to note, guys, and you'll probably see this in some headlines and some news outlets. Oil was, from last month at least, down, was it 21% from its recent high. So people could look at that stat and go, oh, wow, oil's selling off again. Things are slowing down. Or you could be realistic, look at the real situation and note we're not slowing down. And that monthly was just from a close to an open to a close, but we're still within this confined range of 80s to 105. And when we're in the middle of that range, we want to leave it alone.
Yeah.
Look at that. Gold selling off. Did gold give us any entries? No, not really on gold for the shorts. I'd want to see some continuation on gold right here. We have our basing area where buyers tried to step in and they failed. We see this long upper wick. We always see that as price was up at this level and failed to sustain any higher. When we fail to sustain higher, means that the opposite direction stepped in to take control. Now we see sellers are trying. If we can get a break below 44.87 on GC, I would want to see us try to break lower towards 44.70, even possibly 44.60. But that would require this bit of a move right there. Next key level, let's take a look at gold for a moment, guys. See if we could find a good key zone, key target. There we go. Again, last place price consolidated before we rallied. That's an area where there was a mix of orders where people did not get filled because price moved too heavy without them, and price reacted from that zone because of all the buying volume that stepped in afterwards. So 44.60 would be price target to the downside on GC there. That would just be our first price target. Second target would be that pre-market low back from Thursday, and that's at 43.96. Would really call for some selling pressure on gold today.
Yeah. Man, oil is just beautiful with these oil buys right now. I'm just loving it. I'm loving the oil buys right now. I'm loving the buys that I'm in on ES. Hopefully we can continue to push higher. We got that ISM data in 9 minutes. So let's just quickly, we can start prepping for that.
Yeah, exactly. Let's see. There we go. Perfect, guys. If you're looking for any oil longs, would love to see a pullback near $91. Target 94, around 95. That's insane, man. The volatility on oil. I used to love trading oil a couple years ago when it was confined in a range of like 60 to 75. It was just beautiful, man. It was like a 5 to 10 cent stop loss and then like a 80 to 90 cent target. So you were always getting a really solid risk to reward.
Yeah. And look at just if we open up gold right now, gold has again reached that target we're talking about right from over here. So that was a beautiful call. Once we got that escalating headline came in, guess what happened on gold? The short entries that we were talking about from below this area, zoned down to 44.50s, played out perfectly. And if you took this, you knew that we got that escalating headline. There's going to bring in outflows on gold, break below, retest 5-6 minutes after headline, short entries, push down to new lows. And it's the same thing, right? Oil right at lows, rejected, gapped up right here, right at lows, retesting this price zone. You get the escalations coming right as we're talking about it. U.S. equities pushed down into the intraday lows. Now we're going to see if we get a change of structure over the coming sessions and coming hours, so we can position ourselves to ride the buys back to these highs. See, so that's what we were waiting for, and now we got that. All that came into focus. We're going to watch and see how these headlines develop as as the market continues over the coming week. Where you can see here, look, we got a headline 6 minutes ago. Crude oil futures rise more than $5 after Iran. Tazim agency says Iran's negotiating team is stopping exchanging messages with the United States. We called it. Like, we called it at the start of the stream. It's like, hey guys, expect some escalations because oil is sitting at lows. Who else can tell you this? Everybody else is reacting. We're out here forecasting. We're being proactive. We're not just calling out random bullshit trades. We're telling you real world events that could take place at specific price levels and how they can impact the global financial markets across the board. And if you don't see it now, it's not going to be any more evident that everything is connected, that the outflows you saw here, the way that you saw BTC move, it's all the same after the headline. Like, this is all the same. So ignoring everything that moves the global financial market, that everything that's causing the pump on US equities, right? The pump on Microsoft, or like, you know what I mean? Every single outflow, the outflow that's happening on GC. Why do you think this is happening across the board? Is that everything works hand in hand. Why do you think dollar is getting a bid right now from 9:14 a.m. when the headline came in? It's not a coincidence. 9:10, 9:11 a.m. It's all works hand in hand. The markets all move the same. And if you can keep track of that and understand it and use platforms like Market to guide you, to help you trade economic data release, now we have this in focus. ISM manufacturing PMI, manufacturing prices paid, which is going to be the main focus here for market participants, because this is talking about that inflation. This is talking about whether prices paid have gone up on the manufacturing side. So we'll see how that plays out, right? So if it comes out higher than forecasted, then it's going to be bullish for the dollar, because that means that the Fed is going to have to hold rates higher for longer because inflation is on the rise. If it comes out lower, you'll get a bearish dollar, and then of course the opposite impact on equities and gold, because higher on gold will also mean bearish due to Fed having to remain with tighter financial conditions for longer. And then of course the same on ES as well, because higher inflation means tighter financial conditions. And again, this would just be, again, short-term impact. You know what I mean? This would just be short-term impact. Now, if we come below, let's say we come below, and we're looking at for ES over here, we come below 80 or below the forecast, in this case being 85, then you'll get a more bullish ES, because that's lower than expected inflation numbers for prices paid, and then that'll cause more inflows into ES, right? So that's something to keep in mind. Again, gold is now right at our target. So big round of applause for this amazing trade called out to start the week. This one, we didn't call out the exact oil play, but Kevin called it out after we started on this. We called out the fact that oil was going to catch a bid based off of upcoming escalations, and then escalations came 5 minutes after. And on ES over here, we talked about buys from these lows. We're still seeing how the markets develop. And you can see, just as a prior example, sometimes it could take a few hours for the markets to set up before we head back to the highs. And then we could get a retracement back to here, pull back a bit deeper, set up for buys down here before we push up. And that's fine, as long as you're positioned with the macro bias. Even if, oops, let me remove this over here. Even if, let's say, we get some sort of price action where we push deeper into, let's say, here, and then we push up, this is fine too, because you're still positioned correctly, right? That's exactly what happened here. Yes, I had a mistake of having an incorrect stop loss, and I got stopped out right at the wick of here, but I re-entered in market in the morning when we had a safer opportunity. We knew buyers were back in, and it led to new all-time high. It's the same principle. Israeli military issues evacuation order for residents of Beirut's southern suburbs. Remember, they're doing their ground operations over in Lebanon. So Israel orders Beirut residents to vacate southern suburbs. Wow, that's crazy.
Yeah.
Thank you, Jermaine. Appreciate it, man. I really appreciate that. One day I'm going to come visit Texas and I'll hit you up.
There we go, guys. Don't forget, run the like button up. Don't forget to subscribe. Join us every day, man. Monday through Friday for Market in the Morning. Yep, PMI 2 minutes. Real quick, that gold trade we were looking at before too, that I called out on the 15-minute time frame, is moving in favor. So I would look for continuation on that part. It's head towards 44.60.
Yeah, 100%.
Well, it looks good. I can't wait to see how this economic news comes out, see how we react. I wouldn't be surprised if ES gave us a bearish reaction, especially seeing how strong oil is right now. We are already pulling back to that 30,350 on NASDAQ.
Yeah, oil is just chugging right now.
Yeah,
but as I was mentioning, like, it doesn't matter if ES goes to 75.70 or it goes to 75.55. It's still bullish. Like, I'm still looking for buys, whether we're here. I'm not looking to ride like short-term sells based off of data or based off these headlines. I'm looking to use these headlines as a way for me to get into these buys. Then I can position myself towards the upside.
Yeah. Yep. This looks good. Look at that, man. That's crazy. So the market headline that came out, I'll be quick. What do we got? Just a few seconds before that comes out. The market headline that came out earlier about forces threaten to block Strait of Hormuz 44 minutes ago. 44 minutes ago is before oil started to pump. So you would have been able to catch that. This whole entire move, it's still running higher. And then we get a headline 40 minutes later saying, where'd it go? Brent, U.S. crude oil futures rise more than $5 after Iran's agency says Iran's negotiation team is stopping exchange messages with the U.S. So these headlines are legit, and market is too legit to quit, because it's giving you those headlines the second they come out to give you the advantage going forward. All right, let's check that economic calendar. That should be out right now with those dings.
There we go. Prices paid is down, but it's
Ooh.
within the minimum, guys. So keep that in mind. The minimum was the minimum in this case. You can see, well, we might probably get a bearish dollar, but it's short-term impact. Keep in mind, dollar is still pumping off of the headlines and the escalation that we just got. So it's not going to have too much of an impact on dollar. But let's just get dollar opened up as well. And dollar, yeah, it's had no impact on dollars so far. So we're going to continue to see how, and ES is just approaching these lows. ISM manufacturing new orders, employment came out as well as, so PMI was actually good for the dollar, and that's what's holding weight at the moment. It came out right at the maximum above the forecast. So markets are taking a bit by surprise, but the prices paid is lower. In my opinion, this would be holding more weight due to inflation being the main core focus. So we'll see how markets. I think ES is going to probably bottom off here or a bit lower down to this price point, and then we'll see buyers jump in over the course of the coming session. But this has been an awesome trade, guys, on gold, and also riding the momentum buys on oil that Kevin called out, as we saw oil jump in. Kevin made the call over here 91, and now we're oil sitting at 94. So amazing call, Kevin, on that as well.
Bang.
And boom, here you go. You also got the data headlines that just have come in as well. And you can see it, man. Israel military threat strikes. Yep. Same thing. Crypto falls. The Bitcoin drop over 1 month lows. Wow. Beautiful session, guys. Like absolutely beautiful work. Even if you didn't take trades, this is a very informative session. And this all happened because of these headlines that came out 39 minutes ago. So drop a like, a subscribe, share this with your families, get everybody on here.
With
So
your trade buddy.
Yeah, your trade buddy. Share this with everyone, guys. This is what it's about. It's about taking advantage of moments like this in the financial markets, of understanding, hey, this is what could go on. This is what could happen. This is what could help drive price to my buy area where I'm looking to exploit my edge in the market, whether that be here, whether that be here. It's about knowing what could impact the global financial markets and then taking advantage of it. If you trade gold, gold just reached our sell target on market over here, which also perfectly aligned with what could flip it bullish as well. So if you look at something over here, look, what could flip it bullish? If the opposite, the full withdrawal from Lebanon, call for full withdrawal from Lebanon. So if this was to happen, then we could go bullish, and they're not doing their ground operation. So that has been very key, is you need to understand what side the market is leaning on. And that's where these headlines come in, is that they're able to show you in real time the impact that actually happens when you have headlines like this come out. And man, it's just beautiful to see all of this play out in real time as we're calling out day trades on gold, with gold being bearish, market showing you gold is bearish in the day trading time frame due to these factors. Those factors coming out as headlines, adding more support to them, and then you see the move play out. You see oil reach 94. You see ES do an intraday pullback to set up better positioning for buyers to jump in. Keep in mind, it's the 1st of June. It's a new month, so markets are still setting up. ES could, even for all I care, ES could pull down into here, and guess what I'm going to do? I'm going to buy it again. And that's what it's about. It's about taking advantage. It's about having conviction. It's about knowing exactly what's going on in the markets.
Absolutely. Be confident in your convictions. Don't be guessing. Confidence is key in every aspect of your life, man, no matter what you do. If you're just willy-nilly, you're just guessing, you're just going about something, you're not going to see follow through, you're not going to see consistency. But structure is important, confidence is important, and understanding what you're looking at beyond the candles is beyond important.
Yeah.
Really cool. Yeah, I love this this market aspect and trading view like that. That is sick, man.
Yeah, 100%.
That's a game changer right there, bro. That's crazy. Oil back to 94. We were looking at it when it was trading down at $89.
Yeah. And there it is. Right here. We were live. We were talking about it.
Whoa.
Yeah, that's where you got to be careful, right? That's what I mean. You don't want to be buying oil like when it's doing something like that. You want to be buying from the lows, and that's exactly that same principle we were talking about.
Bro, imagine buying oil highs right now after that pump.
Yeah.
No, thank you. No, thank you.
Yeah. Eurozone bond yields jump as US and Iran trade blows.
US and Iran trade blows. Let's see. Yeah, just a lot of negative news, a lot of negative catalysts today, guys.
Yeah. Well, Kevin, I got to get going, but this has been a fantastic trading day session so far. I have a meeting in a few minutes, so I gotta get back to that. But quick recap, guys. This is the main meat and potatoes for this session. So if you're looking to understand what everything we talked about, go through these headlines on market, understand what happened, look at the movement it drove across the board, and how we really took advantage and understood that, hey, we're not going to buy ES at these highs. We're going to wait for better positioning. And those escalations are going to cause that positioning. And guess where those escalations came in? Right when oil was sitting in 89s at lows after coming down from highs. So that's what it's about. We do this every single day and we do it for free. We call out these trades. We break down macroeconomics fundamentals down to the very core. And if you're not taking advantage of that, man, like there's no trading stream like market in the morning where we truly break down global financial markets, every headline as it comes in, talk about it across asset classes, from futures to CFDs on gold, ES futures, oil futures, crypto, whatever currencies, whatever it may be. We're there to capture it. We're there to guide you through these markets. And we're here building the absolute best financial market data platform in the world. I don't want to hear nothing. No one compares to market. No one comes close. Everybody is speaking ABCs. These guys don't speak the language we speak. So that's what it's about. I'm going to peace out now. Thank you, Kevin, for doing this. And I'll see you tomorrow.
Bro, Nil, I'll see you tomorrow, man. Absolutely killer episode. Thank you for being here today, dude. Have a great rest of your day.
Take care.
Take care. All right, guys, that is Mr. Nilabh. He is, like we say, the founder, the co-founder, the CEO, the man behind the mask of market. Absolutely great guy, great analysis, and everything else in between. Let's take a quick look now. We were looking at gold. Look at the gold shorts we were looking at. I called out before on the 15-minute time frame to break and continue. It is trying to get that continuation here. This is a 2-to-1 risk to reward. If you are in this trade, you probably can look to move your stop loss down a little bit to really narrow down your loss if it does run into a loser, right? The whole goal of trading, yes, right, we want to be correct. It's important to be right in trading, but it's also important to be able to manage your risk properly. The difference between a consistent trader and a struggling trader is how they manage their trades, right? Not only that, but do they actually understand, like we've been going over, the fundamental background, what's driving markets, what's driving the economy, and what's driving the markets? These are two extremely important questions that if you're waking up and you're just like, oh, okay, well, here's previous day high, here's previous day low. Listen, don't get me wrong. I mark out previous day high and low every day too. It is extremely important because we're trading the technical analysis, but you can't just leave it there. You have to understand what's really in depth and what's really going on in the background. Think of it like a website, guys. If you guys were building a website, you're coding something, you're not just going off of what the face is showing you. There's a back end. Well, the back end of the stock market is your fundamentals. If I want to enter gold, should I wait for a pullback? Yeah, always wait for a pullback, no matter the trade, no matter the setup. Look at that. We're even getting a pullback right now. This could be a possible entry on gold. I'd want to see some more selling pressure. We see that we did create a little bit of a fair value gap, which is considered a volume imbalance. So we could see if we want to look at that pullback right towards that entry point and see if we could hold this high around 4,500. If we do fail and we continue higher here, we do not want to look to re-enter this, but it looks okay to try to hold. 4,500 is a big spot. Yo, you know it, man. I hit gold very hard thanks to market. Yeah, that's what I like to hear. Yes, sir. Guys, drop some W's for our homie Sedu over here. Appreciate you for joining, man. Always, guys. Drop some comments. Let me know what you're trading. Let me know if you want to cover any specific indicators, any specific stocks, not indicators, but overall market movers. We're talking about NASDAQ before on the 15-minute time frame created this support zone. I'm going to show you guys the support zone I'm talking about right here, 30,350 to about 30,291. And look at this double bottom we had in here. If this current 15-minute candle we're on right now can close above and hold above here, we're not looking for a crazy move, right? We're just looking to trade the range. Can we buy the lows and sell the highs? If you use something like VWAP is also another great tool to use, volume weighted average price, and that would bring us right to 30,436. So I would look to see if NASDAQ can try to hold. Again, overall market context has been more bullish, but we have to remember it's extremely, extremely important to acknowledge where is oil trading right now. If oil is pushing higher, we have good momentum on oil to the upside. We have to immediately think of higher oil as a tax on tech. If there's a tax, not a tax, T-A-X, a tax on tech, tech prices get higher, their return on investment gets smaller, investors get worried. Well, let's take a look at our equities chart right now and see what are equities doing. Are they worried right now? Microsoft is going absolutely nowhere right now, below VWAP. Meta has been selling off the open. Google going nowhere fast. Nvidia had one pump off the open from 215 to 220, the 2% move, just for it to fall flat at this point. Amazon, same thing, moved lower off the open, flat below VWAP, and Apple also not finding direction. When we see this type of confluence in our equities where half are selling off, the other half aren't doing anything, in my opinion, this is a market that we would want to stay out of, especially seeing that we had that headline that's giving us a more bearish impact on ES and NQ and a more bullish impact on oil. Does that mean it's permanent? No, this is temporary. Everything in the market is temporary until proven otherwise. Just like every trend is valid until that trend is broken. Well, guess what, guys? We still made futures market. We're looking at ES and NQ right here. We still made an all-time high today over the futures overnight session. So we could sell off on ES and NQ. We could sell off 100 points or 70 points on ES today. And guess what? We're still in a bull market. It does not matter what one small intraday movement gives us. The NASDAQ, same situation. We could pull back another 300, 200 points here. That's nothing compared to the massive 7,000 point rally we just had, right? Perspective is everything when it comes to the markets. Perspective and fundamentals. Fundamentals drive the perspective. Markets need catalysts to reverse. We have not had a bearish catalyst to give us a reversal yet. We are still bullish. Even when CPI came out a couple weeks ago for last month, and it was way higher than expected, number one. And two, it was almost double the Fed's expected target, which is 2%. It came in at 3.8%. What did it do? It gave us a temporary pullback. 3% to the downside on NASDAQ, 1,000 points max from those recent highs. It was not a catalyst. It was an economic event. Markets were trying to price it in, seeing how things were going to develop. But immediately, here's Tuesday, boom, Wednesday, back on the bull trend, and back on the bull trend. So understand markets, understand the fundamentals, and understand to zoom out, guys. Too many people I see all the time stuck on a 5-minute, oh, we're selling off here, I got to go short. Look, we have a fair value gap, I got to short this. And guess what? They would have been stopped out by a tick. Markets would have moved in their favor on this candle. They would have jumped back in, and then they would have gotten stopped out again. Do not chase markets. Do not chase every small intraday move that you see. Understand that the higher time frame holds more strength, and the fundamentals give you more clarity. Clarity is king because clarity comes with confidence. Let's see, any breaking news headlines in the past 20 minutes or so? Eurozone bond yields jump as U.S. and Iran trade blows. Nope, nothing major recently. So that's good. It's funny, guys. It's a good thing. When we're trading, we do not want headlines to be jumping up left and right, left and right. Let's take a quick look at gold and see what gold is doing. Gold possibly could have hit stop loss. Let's see where that was at. Let's see, GC. Marco, we got to find it, guys. We got to go Marco Polo. All right, we found it. It's trying to move higher. It's definitely struggling. At this point, in my opinion, I'm not a big fan of these gold shorts anymore because of the pullback we had on the 15-minute right here. But that doesn't mean I'm not a fan of it in general. I would still be interested in gold shorts. At this point, I'd probably be a bit more interested, though, in how we react to that 4,500 key psychological level. It was a point that was support in the past. It was also resistance in the past. Can that now be our new resistance point where gold pulls back, creates a lower high? So check this out, guys. We're creating lower highs, lower highs, lower lows, lower lows, lower low. Can we pull back, create a lower high? And that would be your entry short on gold today. Looking for some shorts off 4,500. And again, looking to target near 44.60 and 44.50. Would be interesting to see if we can continue. Don't forget to look at those higher time frames. Look at the 30-minute right here, ladies and gentlemen. Let me just get these drawings off there. 30-minute time frame here on gold. What are we getting? Selling momentum. We're not only getting selling momentum, we're getting volume. When volume matches direction of the price, which means volume's continuing higher while price is trending, that confirms our trend, right? Look at these bears again trying to step in over here. So I would not want to be long. Something you guys can ask yourself when you're taking a trade, when you're in a trade, when you're thinking about getting out of a trade, is ask yourself from the other side. If I was short in gold right now, where would my stop loss be? Okay, well, if I was short and I was thinking of getting out of my short position, if I was long, where would my stop loss be on a long position? And where would my target be on a long position? Because what we're asking ourselves psychologically is to see both perspectives, the bulls and the bears. And what that'll do over time is it'll help you find the spots where there's the most pain and most gain in the markets. If you could find the spot where there's going to be pain, there's going to be gain, right? You cannot have gains in the market. Think of it this way. Gains in the market come from pain in the market. People have to lose in order for others to win. So we have to find those extremes ourselves. We have to find those pain points, those gain points, and that will give you the advantage. That will give you the insight and clarity on your direction and help you really find those pinpoint entries. Look at this. NASDAQ did close above this zone. It double tapped into it a couple times now, trying to hold. If you are in any longs on NASDAQ from 30,350, you would be looking for 30,450 as your price target. It is absolutely insane to think NASDAQ is now starting to see a $100 move. I'm sorry, a 100-point move in a matter of 5 minutes, 15 minutes, like it's nothing, right? That's how high of a price we're getting on NASDAQ and how big the ADR and ATR are becoming. That's the average daily range, average true range. So NASDAQ longs are interesting. Gold shorts are still holding up. We can take a look at ES real quick as well. ES from Nilabh's long position entry is still holding up too. We did get, remember Nilabh was mentioning earlier about getting a lower time frame market structure shift. Well, that's exactly what we got over here once we broke this recent lower high. So once we broke this lower high, we broke it right here. We look for a pullback. And once we start to base out and create a higher low, that's when we would look for our long position. And let's see if we can target back higher. We did just get a headline. Let's make sure it's nothing important. It says a cargo vessel transiting in Arabian Gulf when a large explosion following a hit from an unknown projectile on the starboard side. Let's see how that's affecting oil. Oil got some volatility. Again, if it's an impact on something that disrupts a supply chain, disrupting supply increases demand. When supply is lower and demand is higher, supply prices become higher. Think of it this way, guys. If I have less, we always go to like bananas as a reference. If I have 100 bananas, I could sell 100 bananas for $1 each and make $100. If I only have 50 bananas, well, then guess what? I'm going to have to sell those bananas for $2 each to reach that $100 quota we were originally looking for. When there's a supply issue, things get more expensive. When there's an overabundance of supply, opposite thing happens. Price moves back lower. So, in my opinion, too, going over where oil is right now, how things have been trading, we're not going to get a headline that's like, hey, here's our peace deal. Both sides signed it. We're all good and dandy. We're not going to get a 30% and a $30 sell-off on oil to the downside. The supply chain is still going to be disrupted because those big oil tankers that have been stopped in the strait, they take 3 to 6 months to get to their location. So if it takes that long, even if we ended the war today, June 1st, we're not going to see the oil supply get back to its normal until most likely November and December. So it's something to keep in mind, something to remember, but it's also something to remember too how markets are not giving a crap on where we are in terms of oil, in terms of energy. Energy is another big one that I'm a big fan of watching during these extreme times. Now, energy wouldn't be oil, it would be XLE. XLE is our energy index. And XLE gives us a great idea of where that strength and momentum in investing is, because take a look at this. Right over here is March 30th. March 30th, energy reversed back to the downside, a 15% move to the downside. Well, guess what? Energy reversed on March 30th. Do you know what else reversed on March 30th? The SPY, the NASDAQ. Look at this, a perfect reversal. Cheaper energy costs, higher return on investment for tech, higher tech investments, right? Things are much more bullish when energy is more bearish. But what happened? We tried climbing higher here. This is when, look at this, perfect. Inflation came out. Markets moved lower temporarily. Energy was moving higher temporarily. Energy started dipping back lower again with strong selling pressure. And what does the ES and NASDAQ do? They do the opposite. They find buying pressure and buying pressure and buying pressure. Now, something I would really be keeping an eye on with oil is where are we right here? We're creating higher lows and we were trying to create some higher highs. If oil can start to turn, if XLE, energy, can start to turn around here, I would be very careful and very patient with the NASDAQ and S&P. Just something to keep an eye on. Nothing major, nothing that's going to make or break markets right now, but something to keep an eye on from a day-to-day basis to give yourself an idea of where those extremes are. Take a look back at gold. Let's see, gold did end up rejecting again off of that level 2 a tick, but now it is definitely struggling to find follow through back to the downside. And again, look at this, guys, that NASDAQ trade setup that I called out before. If we can close above this 15-minute support that we had, which we did over here, we retested it. Look at this. The wicks gave us 2 tests, 2 opportunities to take this NASDAQ long trade here. It's moving in our favor. We're currently up about 50 to 60 points from the entry. We would be looking to target just this high over here, 30,460. Small move and take it from there. What's up, Ozzy? Bro, good morning, man. How are you, dude? Missed you. Always good to have you guys in here. Drop a like, drop a comment. We're doing this Monday through Friday here on the Market AI Terminal YouTube page. And don't forget, guys, if you do want to sign up for Market, there should be a link below in the description. But you can use discount code KEV to save 10% off, which I definitely highly recommend, especially in these current market conditions. Not only are these market conditions a bit more on the extreme side, are we seeing reactions? Are we seeing a lot of economic headlines? But you also have to consider who's in presidency and, again, what's going on in the economy. Well, Trump is known for having a lot of tweets, posting a lot of updates, having a lot of meetings, coming on social media, saying this, saying that, going back on his word, taco trades, all of this stuff. Well, guess what? As day traders, which is what most of us are, we want to be aware of every headline that comes out, because any headline that comes out, if given the right wordage, if given the right strength, is going to have follow through, is going to have a reaction. When we're in a trade and a headline comes out and it seems like a reaction worthy headline, guess what? We're getting the heck out of that trade. Let's take a look back. ES, extremely range bound. Remember earlier, guys, I mentioned keeping an eye on equities will always give you some insight too into the direction and momentum of the NASDAQ and S&P. Well, NVIDIA being the top holding of the NASDAQ and ES right now because of how heavy it's weighted as a $5.7 trillion market cap at its peak, it's going to have a bigger pull on direction. Well, look at the charts. Microsoft, range bound still, below VWAP. Meta is selling off. It just made a new low of day on Meta, while Nvidia is making new high of day. Apple's doing the same thing, new low of day on Apple. Amazon is pretty range bound here, trying to squeeze above its VWAP, but failing. And same with Google. Failing on Google, failing on Microsoft, failing on Apple, struggling on Amazon, failing on Meta. The only equity with a little bit of relative strength today is NVIDIA. And just one equity out of the bundle is not enough to give us good continuation and momentum. And as we see, it's playing out exactly as such. Even NASDAQ struggling here, right? Now, if you're in this trade, you can always look to take profit into strength, which would have been this last 5-minute candle, considering how range bound we've been, right? We could see this range and go, okay, up, down, down didn't break the lows, up might fail the highs. We might just stay like this for the rest of the day. And that's very common. That is very possible for the market. Let's take a quick rundown, guys, into the economic calendar and see what's moving going forward. See if we have anything of interest for the next few days. Now, we mentioned we're going to be doing market in the morning every single day going forward. So let's see on Tuesday. Tuesday, we have 10 a.m. We have JOLTS job openings. So minimum is 6.7 million. Maximum is 7.05 million. Forecast is 6.8. And bank forecast is also 6.8. Let's hit our brain icon and see historically, we have been moving lower on our JOLTS job openings, right? Because everybody's hiring AI at this point. So 10 a.m. Eastern, we have tomorrow JOLTS. Wednesday, we have factory orders and ISM non-manufacturing PMI at 10 o'clock. Thursday, we have initial jobless claims, continuous jobless claims, and that's about it for Thursday. And then, guys, we got a big one. We need a drum roll here. Let me see if I can find it. All right, we'll just, yeah, here we go. Unemployment and non-farm payroll on Friday. These are some of our biggest economic events, biggest economic data events in the market. Non-farm payroll, unemployment, CPI, which is core inflation, PPI, which is insight going into the next inflation report. These are the biggest reports we have to watch, and we're going to be covering it here live on Market in the Morning. It will be me and Nilabh again covering, has this come out? How does it come out? And give you guys some trade setups as well, just like we did today, and we will be doing every day. Extremely excited about that, guys. I want you to keep running the like button up so we keep doing what we're doing. Share it with some friends. Let's get that viewership up. The more viewers we get, the longer our streams will become and the better the stream quality. And also, we're going to bring on some awesome special guests as well. So if you have anybody in mind, anybody that you know is a good fundamental trader, let us know and we will look to bring them onto the show. Always happy to bring on other people of like-minded intelligence and like-minded thought process when it comes to understanding fundamentals and the stock market. All right, let's take one quick look. Look at this, man. This little pullback, nothing so far on the NASDAQ. We can take a look at our GC one more time too. Gold. GC. Look at that. Gold's still trying to move on lower from here. Remember, our fundamentals were still more bearish on gold. So guys, I do hope that today's Market in the Morning episode helped you guys, gave you some insight, gave you some clarity. Guys, see us as your favorite show to come join every morning, but a great place to come meet people, talk to people in the comments, like-minded traders, and you could also join our free Discord community. I'm going to grab the link to that right now for you guys. And same thing, guys, you're all here for one reason and one reason only. You're looking to better your trading and you're looking to gain that edge in the market. Well, join the community, drop a message in the main chat, introduce yourself, and start start networking with other traders, right? It's important to build a strong network. It's important to, like we mentioned before, surround yourself with like-minded people who are in positions that you're trying to be in as well. Even if you're two new traders who are meeting each other, you might have insight that the next person doesn't have, and vice versa, right? And that's where the whole saying of two heads is better than one comes in, because it gives you that advantage. It gives you that dual perspective. It gives you a perspective you didn't know you had. Hey, what's up, Jaleel? Good morning, man. How are you? Absolutely. Guys, we're going to be doing these streams Monday through Friday here in the Market AI community. And again, check us out. Heck yeah, Monday through Friday. You know it, guys. Monday through Friday. Economic calendar, market insights, trade setups, you name it, guys. We're going to be here for you guys. Yes, sir. Oh, man, I'm sorry about that, man. Yeah, come join us Monday through Friday. Like, subscribe. We're here on the YouTube and the Twitter feed. And like I said before, join the free Discord community and drop a comment in the main chat in the general tab. Just introduce yourself. Hey, it's me from the Market in the Morning stream. I trade gold and NASDAQ, right? Introduce yourselves, build a community, build a friendship. I've seen online they call it a truddy, a trading buddy, truddy. Find your trading buddy. It makes the experience so much better. And it, again, gives you that insight and clarity that you don't have alone, right? If you're trading alone, you could convince yourself this is working, get stopped out, and then be like, oh, wait, no, this was working. Oh, no, wait, this was working. Oh, I was right the first time. And find yourself blowing your account in one single day. That is not the goal. The goal is to take predetermined trade setups that we find using Market AI, we find with our technical analysis, and following through on it. Guys, again, I hope you enjoyed today's episode. Absolutely phenomenal. Full 2-hour stream of Market in the Morning. We start these at 8:20 a.m. Eastern. The reason we started at 8:20 is because it's 10 minutes before any strong economic event comes out, which usually comes out at 8:30. Guys, don't forget to hit that like and subscribe button. Episode. Nilabh was great. Tomorrow it'll be me and Nilabh again. I appreciate you all for being here, and I will see you guys tomorrow. Take care and trade carefully.